provision for bad and doubtful debts. And now in this module, we would be doing further practice of the provision for doubtful debts, as well as a new topic, provision for the discounts allowable. So we'll see that how this discount allowable thing affects our debtors and our income statement item, the discount allowed figure. We will discuss this concept through a practice question, which is little detailed, so your full-time concentration is required. Okay, so sit properly and be attentive along with your calculators and obviously with your notebooks and writing devices. Okay, just see what is this practice question. In this, we see that on 1st January 2000 X9, the provision for doubtful debts account in the books of S. Zahid stood at rupees 1200. And the provision for discount allowable account is 150. Remember that whenever there is provision, provision is always credit in nature. Okay, so keep this thing in your mind that we have two provision account balances on 1st January 2000 X9 in the books of S. Zahid. Well, on 31st December X9, the closing date of this year, the sundry debtors were 20,400, out of which 400 were considered bad and required to be written off. Okay, the discount allowed to debtors during X9 was 300. That has already been accounted for. So just concentrate on it. That on closing date, we are having this balance, out of which means we have to pass accounting entry for this 400. This 400 has not yet been accounted for. Out of this balance, this very balance of 20,400, this 400 is now considered bad. Anyways, we will do this accounting and then I will recall you this thing once again. But I appreciate if you write somewhere like this, that in the year 31st December 9, further bad debts are 400. Write it somewhere in your notebook so that you should not forget to account for this. Okay, and you can also write this, that closing debtors balance is 20,400. When you are writing for your own self, you can do any type of abbreviation. But remember, when you are writing in your examination, don't use abbreviations. Then use complete word. Otherwise, you will lose your marks. Okay? Very well. So this is what I did for your concentration only. So write few things in your notebook. Well, for the second year, which is ending on 31st December XY0 now, you see, again, let me tell you one thing, that in certain books, you will see the format of date is like X and Y. So X is taken as the current decade and Y is taken as the next decade. Okay? So you can say that it is 31st December 2019. Okay? And then here it's 2020. Okay? Next decade come. Or if you are taking it as it is 2009, then it would be 2010. Okay? So this is the format of dates that you find in certain books. So the same format we are following here. It's a standardized format. Okay. So the sundry debtors were 10,100, out of which 100 were considered bad and required to be written off. Again, write these tips in your notebook. The discount allowed to debtors during 2010 was 50. That has already been accounted for. So these tips you should remember. This is year 1, year 2. Then in year 3, which is 2000 Y1, the debtors were 36,200, out of which 200 were considered bad and required to be written off. The discount allowed to debtors was 50, already accounted for. We are repeating few things because of some reason. So it is decided to maintain a provision for doubtful debts at 5%. Okay. On sundry debtors. Sundry means so many, you can say. Okay. So it is not a name. Sometimes people get confused. Sundry is a name. No. Means so many debtors. And a provision for discount on debtor is 2%. It's the percentage of provision for discount on debtors that we are thinking to allow, or we are estimating to allow in a way. So show how the provision for doubtful debts account and the provision for discount allowable account would appear in the ledger of S. Zahid for the year X9, Y0 and Y1, means the year 1, 2 and 3. Well, let's see. So it's a debtor account in which we see that balance we reopened, means we have taken it from the trial balance. Okay. We reopened this balance, 20,400. Further bad debt, as I told you to write it somewhere. Yes, very good, smart people. 400 is bad debt. Okay. So this is what you took it from here. 400 were considered as bad. Okay. And since this discount was allowed during 2000 X9 300, that has already been accounted for. That's why that is not appearing. That has already been accounted for while ascertaining this figure. Therefore, that discount is not appearing over here now. Okay. So this is the concept that you should keep in your mind. Very clear. So the balance carry forward is 20,000, which is subject to 5% provision. Okay. Now, just come for year 2 and account for this further bad debts of 100. Reopen means we don't have the track of accounting entries during the year, sales and cash received and bad debts and so many other returns, etc. But just in the question, it is given that the closing balance 10,100 is subject to writing of 100 as bad. Again, the 10,000 balance is subject to 5% provision for doubtful debt. In the third year, again, we are having 36,200, from which 200 is bad, and the remaining 36,000 balance is subject to a provision of doubtful debts equal to 5%. Let's see provision for doubtful debt account. We know that in the trial balance, the provision for doubtful debt is 1,200. Okay? And this 1,200 should be like adjusted with the amount that we have. 5% of this equals to 1,000. Okay? So you see that this should be equal to this, means provision for doubtful debt is being decreased with 200. So it will affect the bad debts. It will be credited in the bad debts account with this. Okay, bad debts account will be credited with this 200. And this 400, if you remember, yes, coming from here. And at the same time, you can balance this ledger account and take this 200 to the profit loss account or income statement. Then provision, this 1,000 will be taken in the next year. Okay. We know there is no accounting entry in between these two dates from 31st December X9 to 1st January Y0. And now what happens? We have to create 5% for this. So 10,000 times 5% is equal to 500, which is this 500. Okay. So again, it is being decreased with 500. So this 500 will be credited to bad debts account. And we know that further bad debts were 100, which will be shown over here. So the balancing figure is this. Okay. This 500 will come down here. 500. It is 500. Just tabbing problem or space problem. It is 500. Okay. So don't mind this error. Typo is here. Well, so this is now to be taken. Just see here, 36,000 times 5% gives us, yes, 1,800. Okay. So now the balance of provision for doubtful debt should be 1,800. Okay. Working we have done. And from 500 to 1,800, there's a jump of 1,300, means increase in provision. That increase in provision will be debited in the bad debts account, and bad debts account return of 200 will be there. This balance of bad debt will be taken to profit loss account or income statement. Great. Well done. So now let's discuss this provision for discount. In order to create provision for discount, just see this working first. Okay. The tip is that from the carry forward balance of debtors, we have to subtract carry forward balance of provision for doubtful debt. Here we go. The carry forward balance of provision for doubtful debt. 1,500 and 1,800. Just see 1,500 and 1,800. And the carry forward balance of the debtors, we will be taking from here. Carry forward balance 20,000. Okay. 10,000. Okay. And 36,000. So 20, 10, and 36,000 are the carry forward balances. Carry forward balances of the debtors. Well, so here we go. The carry forward balance of debtors, 20,000, 10,000, 36,000 minus carry forward balance of provision for doubtful debt. What we get is subject to the provision for discount. Okay. So provision for discount, we know very well in the practice scenario was given equal to 2%. So this 2% will be taken on this remaining balance of debtor after subtracting provision for doubtful debt. Okay. So after subtracting provision for doubtful debt, 9,000 times 2%, 34,000 times 2%, 1, 2, and 3 for your ease. I'm doing like this. So we get 380, 190, and 684. Yes, these are the closing balances. Okay, the closing balances of provision for doubtful debt. Put it over here first. Okay, 380 coming from here, 190 coming from here, and 684 is coming from here. So in the first year we had opening balance of 150 given in the scenario. This is here. So the balancing figure is increase in provision 230. Okay. So accounting entry, we know very well that it will be debited to the discount allowed account. Okay. This 230 credit here and will be debited to the discount allowed account. Already there was a debit of 300. Already discount allowed accounted for as given in the scenario. You can read this scenario once again. That 300 is already accounted for. Okay. So that will be appearing in the ledger account along with this. 530 will be taken to the, this is the balancing figure, will be taken to the profit loss income statement. Then come back. We have balance coming from previous year equal to 380. And now we need 190. It means that 190 is decrease in provision. Debit in the provision account and credit over here. Okay. So already written off discount allowed was 50. And this 190 credit, it will give a credit balancing figure which will be shown in the income statement. Not as an income, rather it will be subtracted from the operating expenses section. Okay, it will not be taken as an income. Please remember, most of the students do this mistake. Rather, in the expenses list, there are so many expenses. Along with this, you will do as 140 minus that discount allowed minus. Okay, because the detail are there that because of the decrease in provision, it is giving a credit balance. So it doesn't mean that this is income. Please remember, it does not fulfill the definition of income as per the conceptual framework issued by the International Accounting Standard Board. Therefore, it will remain in the category of expense, but will be written as an item within bracket. Okay, good. Well, then for the next year, there was opening balance coming from the year 2 or Y0, and the closing balance is coming from here, 684. The difference is increase in provision 494, which will be debited to the discount allowed account. Okay, and 50 is already discount allowed, accounted for during the year. Total comes to 544, which will be taken to the income statement. This is the balancing figure of this year's discount allowed. Okay, so the important tips to this module are that provision for discount is calculated after subtracting provision for doubtful debts from the carry forward balance of the debtors. Okay, and the provision for discount is subtracted from the debtors in the balance sheet as a presentation after subtracting the closing balance of provision for doubtful debts. Both are in fact subtracted. Both are contra to the debtors. Therefore, both are subtracted from the debtors balance. But this is the order that we discussed. Good luck. Thank you very much.